Hello, investing bros. It is me, T. Shroom, and today we are asking the question: is it too late to buy Bitcoin? The price has reached a new weekly high. It's surging. It's going higher. Did you miss the boat? Well, sometimes it's actually better not to look at the charts, not even to look at the news, but to turn to our friends in the music industry for guidance. And this morning, that's exactly what we're going to do.
It's not too late, it's never too late.
We like to have fun. Thank you so much for tuning in to the Investing Bros. If you are not subscribed, I don't know how you're going to make it through the episode without subscribing, because I'm going to wow you with value. We're going to be getting down into exactly why it is not too late to buy Bitcoin. Going to go ahead and give it away there in the first couple of minutes, but I'm going to show you why. And the why aspect of why it's not too late to buy Bitcoin is much more important than the binary yes or no. So let's go ahead and get into it. Check out the Bitcoin price action for today. I am zoomed out quite a bit here, but as you can see, Bitcoin has basically been priced at 42,008, okay, for the past year, right? In the entire year of 2024, 42,000 really has been the consensus price, and that has been best illustrated with the price action out here after January 3rd. So really getting into February, the market just said, hey, look, this is the price. We're going with this. But all throughout 2024, there's been arguments for a move higher, arguments for a move lower, but ultimately 42,000 has been the price. I think that ultimately the gravity there leading market consensus at 42,008 really is the fact that where the halving is. And you don't know what the halving is, the Bitcoin halving? We're going to get to that in just a second. This is a show that is geared for folks who maybe don't know a ton about Bitcoin. So today's episode, at least, not the show in general, but today's episode definitely about what you can know about why it's not too late to get into Bitcoin. But let's drill in a little deeper, because we did get a breakout. And on this channel, we like to go ahead and highlight not just kind of the overall price of Bitcoin, but also the price movements on a day-to-day basis, and sometimes even lower time frames than that. So you can see this breakout here pushed us all the way up. We are currently rocking out at $44,981 per Bitcoin, at least on the Coinbase chart. So you could take a look there. That is very bullish. Now, one thing I would have liked to have seen is a retest back down to this support really early on. That would have been nice. We did not get that. That's okay. What we are seeing is Bitcoin's on the 4 hour at least. Bitcoin's candlesticks trading outside of that top line of the Bollinger Band, which is very bullish, right? This is showing strength, showing that there's when the Bollinger Bands widen in general, that's indicating a movement into a phase of higher volatility. And in this case, it's volatility to the upside. But is it too late to buy? Is it too late to buy Bitcoin here? That's the question that we're asking, and I've already answered it. It's not too late. It's never too late. But why? Why is it not too late? Because it looks like price has just gone higher, and you should have bought in here back at 42, right? The old mantra is buy low, sell high. So why is it not too late to buy Bitcoin? Well, really, it's because Bitcoin's just getting started. There's something called the Bitcoin halving. And for the next minute or so, I'm going to explain it to you and why it's important for Bitcoin's continued price ascension. Let's get into it here, guys. This is a stock to flow model from lookintobitcoin.com. There are actually links in the description to the pro version of this. We never talk about it, but we are partnered with Look Into Bitcoin. They're super cool group, great team. But let's take a look here. You can see that these vertical hashed lines represent the Bitcoin halving. Okay, we had the first one on this chart back in November of 2012, okay? And then you fast forward, you've got one in June of 2016, okay? You fast forward, you've got one in May of 2020, and now we've got one coming up approximately May 11th. Now, if you drill in, there's a little bit more of a more accurate calculation that is exactly 69 days from today, and April 17th is the day that would come to fruition. So for all of you who are just kind of tuning into crypto, just trying to understand what Bitcoin is, there is a halving that is going to be taking place. Now, what is a halving? What is a halving T-shroom? What is that? I'm not going to explain that to you because I'm putting out a video this week. It's going to be coming out, and you will be able to watch and understand everything that there is to know about the actual mechanics behind the halving and how that relates to scarcity, the economic principle. But for today, we're just going to stick to the tools that I have pulled up, which the biggest one I'd say here is the stock to flow model. All right, so the stock to flow model is the brown line. The rainbow line, it's not just there because it looks good. It's there because that is the price of Bitcoin. And as you can see, the stock to flow model has been pretty accurate in modeling out what the price story should be for Bitcoin. Going back here, you can see the stock to flow model predicted that Bitcoin would come up to $170. Boy, that would have been a great entry, huh? Well, it exceeded that. Bitcoin went all the way up to just under $1,000 in that. Oh, more than that. Went up to $1,184 in that cycle, right? So far exceeded that $170 prediction, right? But then it came down and spent time below that stock to flow model. Okay, so there's different ways that Bitcoin can deviate from the stock to flow model. It can go up and it can go down, right? It's very unlikely that it's ever going to track perfectly with the stock to flow model, right? But the stock to flow model, and I can't say that enough, it's my favorite word, my favorite phrase. It's essentially, it's using a lot of the computer behind Bitcoin, the computation that takes place that we're not going to get into again in this video, but a lot of the computation behind Bitcoin, and it takes all of the data from that and is able to project that, including other variables like time and also price, and it spits out price, and that's what this brown line is price. That is the ultimate kind of other side of the equation that we're trying to figure out. And ladies and gentlemen, this is why it's not too late to buy Bitcoin right here, because the price for the stock to flow model has actually priced it up at $446,000. That is where the price of Bitcoin, according to this model, which you can look for yourself and determine whether or not it's been accurate. Whether or not it's been accurate, it is predicting a $442,000 Bitcoin as early as May 18th of 2025, right? Not 2024, not this year, May 2025. Okay, so that's when the stock to flow model says that this is probably around the time that Bitcoin will peak, because we've seen it here, we've seen it here, and we also saw it here. It's a certain amount of days after the halving that a bunch of new folks to crypto come surging in, and they're like, ooh, I got to get this, and they're making the right decision if they hold it, right? But a lot of people, they come in, they buy Bitcoin, and it goes up, and then they sell right around in here, right when the panic starts to set in. And unfortunately, there's also a lot stupider people, and I'll go ahead and call them stupid, who sell down here, right? They sell down there, and they sell for a loss. They bought up here in the euphoric phase, and then they come down here and they sell for a loss. Bad. That is the worst case scenario for you, especially if you're investing money you can't afford to lose. Do not do that. If you buy in the euphoria, right? If you watch this video and you're like, okay, Bitcoin, cool, I got to go pick up my sister from school, right? That's fine. But don't come back in a handful of months, in 3-4 months, whatever, when Bitcoin is in euphoric phase, and buy a bunch of Bitcoin, and then it comes back down in the bear market, and then you sell. Don't do that. That is bad, right? If this is the first time you've ever traded anything, right? You buy low, you sell high. You do not buy high and sell low. Now, sometimes you have to buy high to sell higher. In the case of Chainlink, that seems to be kind of the case. All right, folks, that is the case for why you should buy Bitcoin, but it doesn't stop there. It doesn't stop there. No, it doesn't. One interesting thing I wanted to point out, and this is going to deviate from our overall noob kind of focused content this morning, but the Dixie is curiously also coming to the upside. So you can see here, this is the 4-hour chart. So we've got a weird kind of 0.4% move to higher here, which is a decent amount. You can see this last candlestick back here was about a 1%. So this much in this short amount of time, at the same time that Bitcoin is breaking out, is very curious, right? I'm not exactly sure what that is. China, cough, cough. We've talked about it already this week. A lot of money's coming out of China, and apparently a lot of money is rotating into India, from what I've been reading. But you've got to imagine it's got to be going into the next 2, 3, 4 biggest currencies and the biggest money parking lots in the world, which are gold, U.S. equities, U.S. real estate, and the emerging industry of digital assets, which the chief among those is obviously Bitcoin, I would argue. So, but apparently India is also fetching the yuan, the rotating yuan. So, all right, speaking of yuan, we're going to move on to the next bit here, which is another argument for why you should continue to buy Bitcoin and that it's not too late. In fact, it's never too late. And before we do that, let's go ahead and jump into the comments and see what is going on. We've got Army Piper, the legend, Dylan Martinez. We've got Pokemon Gains showing up and showing out. We've got Blackie Chan, who showed up yesterday to a fun little workshop I was having for a tool that I'm creating to cover the news better. And Blackie Chan had some really good input to contribute. Ninja Glock in the chat. Average Crypto Joe. Great day to wake up. Man, it's hard to argue with that. It is a great day to wake up. Eric Wallen in the chat saying, morning, fine people. You know, we've got a whole community of bros here, and it takes a village. It really takes a village to answer the question, should you continue to buy Bitcoin? Is it too late to buy Bitcoin? And that hopefully that village is going to help agree with me, help present some reasons why my thesis is correct, that you should indeed keep buying Bitcoin, that it's not too late to buy Bitcoin. Let's get into what James Van Straten has said here. He said Bitcoin is almost picture perfect with the two previous cycles from the low. So we took a look at the stock to flow. We're going to look at another chart as well. At this point in the cycle, 2015 to 2018, there was a 170% increase. From 18 to 22, 144% increase. And from 22 to now, 166, right? So we're right on track according to this chart. Now, if you're watching the channel for the first time and you don't like charts, this is probably not the channel for you. We cover a lot of charts because charts tell the story. And that's something that we're hoping to expand on here pretty soon. Well, Glassnode is a pretty big provider of charts. Let's see what they've got rocking here. As you can see, the black line represents the Bitcoin cycle that we're currently in. And as you can see, we're right on track. A lot of people have said the 4-year cycle is broken, or the stock to flow model is broken, or the rainbow chart is broken. I don't know. I think that this chart right here may indicate that that the halving cycle that produces a 4-year cycle looks to be right on track. Looks to be right on track. Thank you so much, James Van Straten. There's a name for you. That's a good name. It's a good, sturdy name. Of course, here's the Bitcoin clock again. You can see just 69 days until we reach that halving, and that's going to be currently calculated in for April 17th. But I've got to be honest with you guys. After covering the actual day, I wouldn't be surprised if that day somehow slid into late May, right? I'm sorry, not late May, but late March, and because that number has been moving all over the place. Usually, I don't. Let me know in the chat. Do you guys remember there being so much volatility in the prediction tools of when the actual halving was going to take place? I don't remember it being this way. So let me know. Let me know what you guys think. All right. Well, if those two charts, if the quotation here, if my input hasn't been enough to convince you that it's not too late to buy Bitcoin, well, then you got to give it up to the #1 author of financial literacy books himself, Robert Kiyosaki, who has launched some new quotation that is reverberating around the cryptosphere. Yes, Robert Kiyosaki, rich dad, author, issues a dire warning on bank failure, Bitcoin and only option. So this is getting into what's called a fundamental argument, right? So bank failure is not a technical argument. A technical argument would be why Bitcoin's going to go higher is because there's a technical breakout here, and you can measure the breakout like this, and that it should go a certain percentage higher based on that breakout, right? This breakout has it predicted to 45.5, right? That's a technical argument for why Bitcoin should go higher and is going to go higher, in my opinion, right? But this is a fundamental argument, and those are two different things, and those are the two different methods of analysis. There's technical analysis, and we're about to read about fundamental analysis, and that is not unique to crypto. That is unique to investing in general. There's fundamental arguments. How good is the project? What is the value proposition? What are the events that are threats and that are opportunities that are happening for that fundamental argument? And then a technical argument, anything you can see on a chart, right? Or anything that's like heavily quantifiable, that's mapped over time, that can give you an indication of whether or not it's bullish or bearish momentum and different things like that. Let's read further. Bitcoin is an only option. I don't know if I agree with that title after reading the actual article here, but let's read. He recommends buying gold, silver, Bitcoin before banks fail and the world economy crashes. Good morning. Unfortunately, the world of fake money is crashing, and gold, silver, and Bitcoin are parachutes for your personal soft landing. Is it too late to buy Bitcoin? I don't think so. Not if you think these banks are weak and unstable. Billionaire crypto investor Arthur Hayes also predicts likely bankruptcy of NYCB after a junk downgrade by Moody's and class action lawsuit by shareholders. Man, oh, that sucks. That's the first time hearing of the class action lawsuit. That is not good, right? Arthur Hayes, you came for the Kiyosaki, you stay for the Hayes. That's what I've always said. Now, it's very, very bullish to hear, such brilliant minds. Of course, Arthur Hayes, a crypto native, but Robert Kiyosaki not. He's a real estate guy, then moved into being a gold bug, which he's currently a gold bug, obviously, precious metals guy in general. Somewhere in there, he also became rich off of writing and selling books as well. But he's bullish on Bitcoin. He's saying it's not too late to buy the king of crypto, which is Bitcoin. All right, guys. Well, it is a good time to kind of transition here and let you guys know that this episode is actually brought to you by NordVPN. So NordVPN is our sponsor for digital security. And right now, they've actually got a pretty good discount, 63% off. And look at this. Can you relate to this? Being cold, outside, maybe even feeling vulnerable? Well, you may be feeling vulnerable because it's cold outside and you're weak, right? But your digital security doesn't have to be vulnerable. And right now, you can stay safer online with the leading VPN service by clicking on the link in the description of this video and getting access to this amazing 63% discount. And guys, there's not like there's some huge commitment to this. If you don't like it, after 30 days, it's a money-back guarantee. How do I know this? Well, because it says it right here. 30-day money-back guarantee. Go ahead and click the link in the description today. You won't be sorry. You'll be feeling so much less vulnerable. You might still be cold, right? You might still be cold. But depending where you live. I live in Florida, so I'm not as cold. But you'll still be cold, but you'll feel a lot more secure. So, well, somebody who also is starting to feel a little less secure is JP Morgan and Wall Street in general, as the regional banking crisis does seem to continue and pose a threat to traditional finance. Let's take a look here. BlackRock, Fidelity, Bitcoin, ETFs have a liquidity edge over Grayscale, says JP Morgan. Even though outflows from Grayscale's GBTC slowed in the fourth week following approval by the U.S. Securities and Exchange Commission, the fund is expected to lose out to the newly created ETFs, and in particular to the BlackRock and Fidelity products if it doesn't make a meaningful cut to its fees. Can you believe it? You probably asked yourself, now why would people rotate into IBIT, which is the BlackRock spot Bitcoin ETF and the Fidelity spot Bitcoin ETF when they could just stay in GBTC. If you thought to yourself fees, you are the big winner. But it doesn't stop there. An additional reason beyond fees is that BlackRock and Fidelity ETFs are already commanding an average of versus GBTC in terms of two liquidity metrics. Analysts led by Nicholas, and we've seen this name. I'm not going to try to name it, but we've seen this name before. Pretty reliable. What they said came to fruition. So let's see what they've got to say here. These are the two reasons. These are the two liquidity metrics that kind of give you a little bit of argumentation of why you might see a higher allocation eventually into BlackRock and Fidelity's spot Bitcoin ETFs over Grayscale's GBTC, in addition to the fees. These are those reasons. The first is the bank's proxy for market breadth based on who-he-be ratio, right? So we can drill into that as much as we want. The value for GBTC is about 4 times higher than those of BlackRock and Fidelity ETFs, implying they exhibit significantly more market breadth than GBTC. The second metric is based on the average absolute deviation of ETF's closing price for the net asset value, the NAV. So you might be thinking, T-Stream, I thought this was noob content. Well, it is, but I like to sprinkle in a little bit of steak with the salad, guys. As you're learning about crypto, sometimes it's good to go deeper, right? It's good to go deeper and understand things. Even if you don't understand 80% of that, right? You got to familiarize yourself with understanding some of the deeper layers here that we're dealing with. When it comes to TradFi and how these banks are are going ahead and integrating crypto in by issuing and getting approved spot Bitcoin ETFs, it's good to understand what's going on, right? Because it's a bit they're ultimately opening the gates to the largest bodies of money that have not yet come in, have not yet accessed Bitcoin, and so it's good to understand what that is going to look like and what the pitfalls might be. All right, well, it's all been sunshine and rainbows so far. We've got to talk to the chat. We've got to see that indeed it is not too late. It is never too late to buy Bitcoin. However, it cannot be all sunshine and rainbows. We got to get into this story here. DeFi shouldn't have to worry about SEC's expanded broker rule. We're going to find out about that broker rule right now. In short, on Tuesday, the U.S. Securities and Exchange Commission adopted a rule that will require more firms that routinely work with securities, like hedge funds and market makers, to register as dealers and to submit to stricter oversight that entails. The rule was originally suggested by the U.S. Treasury Department to fix liquidity issues in the Treasury bond market by addressing the regulatory gap that formed with the rise of electronic trading. Traditionally, there has been a distinction between investors who make directional trades and dealers, typically large institutions that buy both sides of the market to provide liquidity for those traders. The old definition of a broker included any company engaged in buying and selling securities as a part of a regular business, with regular business essentially referring to the service of market making. It's a pretty liberal interpretation, if you ask me. The new rule essentially expands that definition to include any institution that makes a lot of money, capturing bid-ask spreads like quant funds and high-frequency traders. According to Reuters, only about 48 firms are expected to have to comply because they now trade enough in both directions, largely through automated trading software, to be considered dealers. But CoinDesk, if you scroll up, CoinDesk is going ahead and jumping into a conclusion here, just in their title, right, which is that, but if these protocols can't comply, is it really a threat? Which is an interesting point, right? So there's kind of pointing out that these protocols are decentralized, right? So there's no organization behind it pulling the strings. Therefore, just because some governmental regulator says issues a new edict, issues a rule change, that doesn't mean that that decentralized protocol can comply. It also doesn't mean that that decentral protocol ends, right, or stops. If people keep using it, are those people in violation? It's weird, and this is the weird continue. We're far from over. This is just the beginning of this dance between traditional regulation and just the concept of decentralization of technology and access to money, right? It is going to be complicated, but CoinDesk is going ahead and jumping and saying, or asking the question, I should say, but if these protocols can't comply, is it really a threat? And right now, I'd have to say yes. A resounding yes. It does still matter, even though we're at the beginning of this dance between trad regulators and decentralization technology. Just because we're at the beginning doesn't mean that right now the answer isn't clearly yes. It is still a threat. So that's my take. Ultimately here, guys, if you're coming in, you've stayed this long for the noob content, that's great. Really appreciate it. Hopefully you've learned something. If you have, smash the like button and consider subscribing. But here, we're asking kind of a deeper question, which is DeFi, which is decentralized finance. It's a subsect of crypto in general. It's a way that folks can actually lend money through DeFi, through decentralized finance. And it's all the rage. And it's causing quite a stir. So ultimately, guys, it is going to be interesting, but it seems pretty cut and dry to me that it is a threat. It is definitely still a threat. The real question is the SEC is going to have to go through the traditional methods of suing, right? Suing who is a good question to start with. Suing who, but then from there, bringing them to court, right? And then bringing who to court. How do you bring a protocol into a courtroom? You don't, because a protocol is better than a courtroom, right? Is kind of the obvious kind of meta observation here. But then let's say you get some conviction from the court, even without the defendant present. Then you're able to say, okay, now we're going to enforce this, and how do you enforce it, right? So there's all these questions, and that's why I think Coinbase is actually good and apt. They're doing the right thing by asking this question. But I do still think the answer is yes. The better question is, how the heck do you enforce a ruling that these protocols are going to need to comply with this new SEC rule change. Well, the good news is that A, you don't have to worry about this because you're probably not working for regulators or operators, but the other good news is the rule scheduled to go out in full effect in April 2025. So it's not going to be hitting the streets. It's not going to be hitting your favorite DeFi coin anytime soon. It's got some time to figure out how to comply, and the SEC has a little bit of time to crack open a book and actually learn what decentralized protocols are. So we're all having fun. We're all learning something new. Bitcoin continuing to move higher. And man, it is really just exciting to see. Of course, this very rudimentary technical analysis kind of puts it Bitcoin potentially ending the day around 45,500. Of course, we could get a test lower to come test, probably, these top wicks around here, maybe around 43.8, right? And then a push higher to go tap those highs that I've pointed out with this extension, 45,005. So more than likely, my guess is that, if we do get continued bullish pressure, let's say the Dixie turns around as well, the Dixie loses steam, which actually it has. Look at this wick is actually showing that the Dixie is moving back downwards. So we could have what we need from a global liquidity standpoint, currency standpoint, to go ahead and push up and test those highs, right? But I'm thinking probably, well, I don't know. I mean, this is the question, right? Because if you think that it can go ahead with this bullish push, then you take the long. But there's also an argument that Bitcoin probably will take a short here, will take a little bit of a correction, come back down, test these levels, and then figure out what it wants to do, and then go higher. But and what I'll say is, remember, if you zoom out here, there's been, as we started the show talking about, there's been a lot of agreement that Bitcoin's price really should be 42,008, right? Until something changes. Well, that something obviously is this, the halving coming up, and with every passing moment, that bullish thesis, that bullish gravity, bringing Bitcoin to the halving, and history repeating itself. That narrative is not going away. It's only getting stronger with the passage of time. Time is on our side. Time is our friend. When you invest in Bitcoin, the fun never ends because time is on your friend. Time is on your side. Time is your friend. Goodness, I can't get it right. All right. So anyway, that's kind of what I'm thinking here, guys. And I'd love to see what you guys are saying in the comments. So let's do that as we kind of round out Digital Dave. Dave Digital. Man, it's not dyslexic being easy. Dave Digital saying, hello, Mr. Shrum. Hello, Dave Digital. I want to make sure I'm not missing any kind of huge spikes. Yes, Caspa. Let's go take a look at Caspa here before we round out. Oh, and it is looking good. This is a good chart to look at right here. Very nice. Oops. So take a look here with me. Caspa was, last time I was looking at Caspa, it was just testing this downtrending line of support. It's the first time I've cracked this chart today, so this is really nice to see. I'm actually going to stay on the 4 hour. Take a look here. It is, okay, so this is the moment right here. This is a big day for Caspa, because if it can get a close here above 12.6, 12.5, that'd be bullish. If we can get a candlestick close above that, that'd be very bullish. And also, that would not only put it above this downtrending line of support, also this one. So that would be really, really good to go ahead and flip both of these resistance levels into support, and then the more importantly, horizontal level into support too. I would argue is more important. So we'll see. We'll see if that happens. There's not a ton else going on here. I'm not seeing too much volatility. What's this one? Miro's coming back. Yay. Everybody cheer for Miro. All right, let's take a look here at Bitcoin. Yeah, so where does Bitcoin need to close? If Bitcoin, in order to make a move higher, I think Bitcoin probably needs to get up and close a candle above 45,000, which we are now at, ladies and gentlemen. We are back up above 45,000. So if we can get a candlestick close above that, which is very doable, very doable. We just need the bulls to stick around, right? We just need the sellers to go ahead and take a day off, go play golf, and just leave your money in the market. Get a close above 45,000, then we can push higher, right? I think day traders are probably looking at this, kind of chomping at the bit for this to push higher. Maybe looking for a short here, but ultimately, I do think that this is pretty bullish, and that we'll make a move higher here. The real question is, I mean, there's a lot more questions, right? There's a lot more questions, but the show's over. It's 9:30. I've had a huge honor by having you all stick around and watch and listen to the news today. Brought you the news, but mostly we're asking the question, is it too late to buy Bitcoin? And, we looked at some charts. We asked some questions. We read some articles. We heard from Robert Kiyosaki. We heard from Arthur Hayes. But let me know, smash the like if you agree that the best way to determine whether or not it's too late to buy Bitcoin is just to ask the artists.
It's never too late.
And of course, we know what the artists say. Thank you so much. Today, Army Piper joins me on the 3 p.m. show live on Investing Bros. You don't want to miss it. He's going to go much more in depth on the charts, and we're going to go much more in depth into the altcoins and take a look at those. I cannot wait to see you there, bros. 3 p.m. Eastern Standard Time.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor of the TA. Shout it out loud on the PA. T-Shrooms news, got your word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros.